In this video, I am going to do the technical analysis of S&P 500 index for the week commencing from January 10th, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. So let's begin with the weekly chart. So this is the weekly chart. Okay, weekly chart means one candle represents 1 week, not 1 day, 1 hour. One candle means 1 week. So if you look into this, the last candle, see, last week I told you that the market is bullish and market is expected to move up, and the market will come down only if there will be some news, okay, related to the COVID, or maybe again the same thing, the Fed updates also. Otherwise market is bullish. So on January 5th there was an update from the Feds and the market reacted to that update and it came down heavily. Okay, otherwise if you see that on January 3rd and on January 4th market was moving up. Anyways, so if you look into this, the last candle, this candle is a heavy bearish candle, and this candle has engulfed this the previous small bull candle on the weekly chart. Okay, so the interpretation of this candle, this particular candle, interpretation of this candle is that the next candle that is going to form, or particularly on Monday, there are chances that market will come down, market will follow this, because there is an engulfing, there is this engulfing. Okay, the body, so this candle has completely engulfed the body of the previous candle. So you can see that on Monday there are chances that it will come down. And furthermore, there is one more thing. If you see this moving average here, okay, on Monday this moving average will rise to around this level. Okay, somewhere around here. So now it is highly likely that market will come and hit this moving average on Monday. And then what happens on Monday, Tuesday, Wednesday, and for the rest of the days, okay, that we will discuss on the daily chart. But the initial open on the market, open of the market on Monday, okay, or the initial reaction of the market on Monday, it is expected that it will come down and it will try to hit this moving average on the weekly chart. Fine. Now let's do the technical analysis here on this the S&P 500 chart. So technical analysis, if you see, this is the upper band of the Bollinger Band, okay, and the median is somewhere around here. So the market is in between the upper band of the Bollinger Band and above the median, which means the market is bullish. Now comes the moving averages. So if you look into the moving averages, let me remove this. Okay, now if you look into the moving averages, there is still a clear fan out, which means the market is bullish. Okay, now comes the Ichimoku. Market is moving above Ichimoku on the bull side of the Ichimoku, which means market is bullish. Okay, so considering these indicators, market is bullish. Now let's talk about some other technical indicators here. Okay, first we have the MACD. So MACD last week it was marginally bullish, and last week it was bearish. So market is bearish since the week of November 29th. Okay, and last week there was this a little hope that because there is a marginal positive movement in the MACD, which means that that market is expected to move up, and then we will see the bullish market. But because of the Fed's update on January 5th, okay, market came down heavily. Anyways, now you see that the MACD is less than the signal here. MACD is less than the signal, which is so that means it is bearish, not heavily bearish, but it is marginally bearish. Okay, now if you look into the stock RSI, now the stock RSI is again bearish because the K channel is less than the D channel, and the K is around 39 and the D is around 41. Not much difference, but it is still bearish because MACD and the stock RSI both are bearish. So there are heavy chances that market is that market will struggle, okay, if it try to move up. Then comes the divergence. So divergence is around 61. So 61 is okay. And if it hits, 70, 68, 72, okay, then. Now there is one interesting thing here. Last week the divergence was 65. Okay, so last week, if you have seen that technical analysis, then I told you that divergence is expected to increase in the week of January 3rd, and when the divergence increases and when the divergence hits 70, okay, or approximately 70, then the market will come down. So on 4th of January, that was Tuesday, on 4th of January, okay, the divergence it increased to almost 70, almost 70. So that was another reason that when the market reacted to the Fed's update on Wednesday, January 5th, okay, it came down. Means it was supposed to come down, but because of that, Fed's update, it came down heavily. So it was coming down, it was clear. See, without Fed's update, it was supposed to come down around here or around here. That's it. Okay, and then there was a bounce back. It was expected, but with the Fed's update, it came down heavily. So this was certain. Okay, on 5th of January. Okay, so we were talking about the divergence. So divergence is now under control. It is normal, 60, 61. Then comes the momentum. So momentum is almost dead. It's not supporting neither the bulls nor the bears. So on the weekly chart, okay, through all of the technical indicators, these technical indicators, moving averages, Bollinger, okay, Ichimoku, they are saying market is up. But MACD stock RSI, they are saying market is down. So on this the weekly chart, it is not clear whether there is a bullish movement or a bearish movement. So we need to see like what is going to happen on the daily chart, and how and what the technical indicators on the daily chart are saying about the trend, like whether the trend is clear on the daily chart, okay, or not. So let's move on to the daily chart to see how it is going to react in the coming week, and what is the most probable trend in the coming week. Okay guys, so we are here on the daily chart. Okay, this is the daily chart. Daily chart means one candle represents one day. One candle means one day, not 1 week, 1 hour. One candle means one day. So let me so before I do the technical analysis here, okay, let me write down the support and resistances here. Support and resistances, okay. So there is no change in the support and resistances. Okay, support and resistances remain same as they are for last couple of months. We have this resistance here at 4885. Let's see, 4885, 4885. Then another resistance here at 4860, 4860. Then we have another resistance at 4830, 4830. Now, okay, so now it is going to act as resistance. Earlier it was, support. So it is at 4790, 4790. Then we have 4740, 4740. Then we have this support 4690, 4690. Okay, another support at 4635, 4635. Again, see, these support and resistances are not the standard support and resistances. These are what I have analyzed the last 100 years of data, and then I have calculated these support and resistances. Okay, so these support and resistances are you know very sensitive. Okay, and and you will notice that whenever market hits these support and resistances, okay, something happens in the market. Then 4592, 4592, and then finally we have 4572, 4572. Okay, so uh, fine, that's it, because market has closed at 4677, and if it comes down, then it would come around 4572. Let me write this one also. It is at 4527, 4525, 4525. That's it. Okay. Uh, Fair enough. So guys, in my last video, okay, last technical analysis, I told you that this year 2022, okay, this 2022, this is the year of bubble, because the markets, or means mostly you can say all of the markets around the globe, they are in bubble. And market, and these markets, okay, they will come down anytime, okay, and this is expected to happen in the first quarter, okay, like January, February, March, but most likely it is expected to happen in the last leg of the first quarter, okay, or again you can say like February, okay, the usual one, because whenever this recession comes, or whenever markets, okay, they comes down from the peak, so it generally happens in the month of February, or in the month of, I guess, August, August or September. Okay, so just be careful. Okay, if you are bullish on the market, then just be careful, because market is already, this S&P 500, it is already in bubble. Okay, okay, so we are back on the chart. This is the chart. Okay, so let's do that. So let's first do the technical analysis, and then we will see like how the market is going to behave, okay, on Monday and Tuesday and for the rest of the days. Fair enough. So first, we have this. Okay, where is the Bollinger Band? Okay, so it has changed. This is the lower band of the Bollinger Band. Here comes the median of the Bollinger Band. Market has closed between the lower band and the median of the Bollinger Band, which means market is bearish. Then comes your moving averages. Surprisingly, there is no fan out. Sorry, surprisingly, there is no crossover, but still a fan out. Again, whenever there is a fan out, okay, this kind of fan out, uh, then it is an indication that market is still bullish. So until and unless there is a crossover, it is not bearish. Secondly, market, if the closing of the market, okay, like for a few consecutive these candles, okay, it is below these the moving averages, then only we can say yes, then also it will be bearish. So as of now, moving averages, okay, they are not reducing any trend, neither bullish nor bearish, because there is a clear fan out that is supporting the bullish. Okay, this is the bullish movement. Then secondly, these two candles consecutively, they close below the moving averages, that are saying that market is bearish. So it is confusing, okay, through moving averages. Through moving averages, this trend is not clear. Now comes the Ichimoku, because market is moving above the Ichimoku, which means the market is bullish through Ichimoku. Okay, so now let's see what other technical indicators are saying. Other technical indicators, if you see MACD is clearly bearish, clearly bearish. Okay, not marginally, but it is clearly bearish. Then comes the stock RSI. Stock RSI is again clearly bearish. Both MACD and stock RSI are bearish, and surprisingly, this MACD and stock RSI, they are bearish on the weekly chart too. So on the weekly and on the daily chart, both of these stock and RSI and MACD are bearish. So that is something. Okay, that is like it is a kind of confirmation that yes, there are bearish sentiments in the market. Okay, so next comes the divergence. Divergence is normal. Divergence, it is not a problem. Okay, it is normal. Then comes the momentum. So momentum is earlier it was building up, okay, in favor of bulls. Okay, but because of this candle that was formed on Wednesday, January 5th, okay, it has come down. So as of now, momentum is not supporting neither bulls nor bears. Now, if you see that all of the technical indicators on the daily chart are saying that it is bearish except the MACD and this confusing situation, okay, of the moving average. So if we exclude this, sorry, this is not the MACD, this is the cloud. So if we exclude the cloud, the Ichimoku cloud, then you can say yes, all of the technical indicators on the daily chart are saying that market is bearish. Okay. Uh, Now let's see how the market is going to react in the coming week. Again, as I'm telling you for last many weeks, this 4740, okay, it is the critical support and the resistance for S&P 500 index. Okay. Now market, it came down, okay, and it closed below the support of 4690. Again, 4690 in 4690, okay, along with 4740, okay, it is important here. But the most important part here is the 4635. Okay, see 4635. See the candles here, see the candles here, and some other candles there. Okay, so 4635 is most important support here. Now what you need to see here, that if the market comes down on Monday in the first hour, okay, or in the first 15 minutes, then it is going to hold here, okay, this 4635, or it may further come down, okay, from 4635 to hit the boundary of the Ichimoku, and then it may retrace. Okay, see the chances are, if uh, means see like I told you that this 2022, it is the year of bubble. Okay, and that does not mean that market is going to come down, okay, or from the first week of January. So that is not going to happen, because it never happens. Okay, so what is expected to happen is, again, what is expected to happen is, first market may come down, okay, but then market will retrace. So in order to come down, okay, in order to see a bubble burst, market first must move up, okay, significantly to these levels, 4860, 4850. Okay, once it hits these levels, then only it can come down. But as of now, if you think that market is coming down, no, it is not coming down. But yes, on Monday or on Tuesday, you can see that it is coming down a bit, but then it is going to bounce back. Either it will bounce back from here, okay, or it will bounce back from the boundary of the Ichimoku, or it may enter Ichimoku, and then it may hits this, this support again, 4592, and then it will retrace, or from 4572. See, whatever happens, before we see a bubble burst, okay, market will move up. Now when the market moves up and when it hits 4800, 4885, or 4900, then only the bubble then only this bubble, it will burst, and then the market will come down significantly. Okay, as of now, it is not happening. Okay, so what we are what yep so what you should do here, first let the market come down. Okay, let the market come down, and then look into the closing of the candle on Monday. So I will say that do not trade on Monday. Okay, just on Monday, it will be just wait and watch, this situation. On Monday, just be in the wait and watch mode. See what is happening on Monday. And most probably, okay, if you see that market is holding above this support or above Ichimoku, okay, see, in intraday market can come down, but it will retrace. Okay, what we are looking for is the closing of the market. So when you see that the closing of the market is here, okay, it is above 4635, then you can expect a rebound or a retrace in the market. So let the market first move up, okay, and when the market moves up, then you can expect this bubble to burst. So the these the fair chances are that 4860, this 4860 is going to act as the final this the level that after hitting 4860 or 4870 4875, okay, market is expected to come down. So that is where, so you are going to wait for these resistances to hit. When the market hits these resistances, then only the market will come down. Okay, so my advice is that on Monday, so Monday, okay, you are going to wait and watch. Simple. Okay, do not hurry, wait and watch. Just observe the market. Okay, so you will simply observe the market. So on Monday, just wait and watch. Do not trade on Monday. Let the market do whatever it wants to do. Okay, and then look for the closing of the market. If you see market is coming into the cloud, then do not trade. Whenever market is in the cloud, never trade. Okay, this is how it works. So let the market clear from the cloud, and then only you can trade. So guys, I have given the link to my Discord spreadsheet, that the Google spreadsheet, in the description of the video, so you can take a look, and when you are ready to join, so just drop me an email. And also I have given the link to my options trading profit strategies program. So if you want to join that particular program, so you are welcome. So guys, this was my technical analysis for the week of January 10th 2022 for S&P 500 index.